Jonathan York, Bay Financial Partners, looking at investment markets. Earnings season still progressing reasonably well in the US. Still sort of a mixed bag going forward, but on the whole, sort of slightly better than anticipated. What is quite interesting is the big tech, despite the sort of layoffs, currently around sort of 70-odd thousand people have lost their jobs now in the big techs. Those shares seem to be coming back into a little bit of sort of favour out there. Probably not surprising given the huge sell-off we saw last year. Interesting as well, obviously, with the inflation data coming out, and now for the last couple of months it has certainly been on a downward trend, and that sort of giving a little bit of fresh hope that potentially the Fed is now looking at a more sort of easier path going forward, with potentially maybe just a 25 basis point hike at the next meeting. Certainly the 10-year seems to be trading sort of that way. That's currently around sort of 350, and really that's come a long way back from sort of 425, which it was trading about 3 to 4 months ago. Now, obviously, the war in Ukraine is still sort of taking pretty much centre stage, and potentially now after you get through those sort of cold winter months in Europe, a new sort of offensive is sort of being planned. There's talk that Putin is now looking at sort of conscripting a further 500,000 troops. So certainly, if that is the case, then again, it's looking like a long, protracted, drawn-out conflict. Interesting as well is how quiet ex-President Trump has been. Very little on social media and very little sort of comments out there, which is a little bit surprising, really. Oil's come back a little bit, just below sort of $80, but sort of straddling sort of $80 plus or minus sort of $2. Now, the UK is bracing itself for a further round of industrial action and strikes, and potentially this could bring the country almost to a bit of a standstill. Although interesting, the UK government is now paying people to sort of save power to try and avert a potential sort of energy crisis in the UK. Still sort of grappling with sort of sending further aid to Ukraine. The latest debate around sort of German tanks being sent. Germany has to give the final say on that, and at present they are sort of holding out and not giving that go ahead. Now, the Australian economy is still pushing on at a pretty good rate, although suspect the next round of inflation data will be a little bit on the sort of high side and will show a reasonable sort of jump in inflation. But will it be enough to sort of knock the Reserve Bank into moving by 50 basis points? At present, it looks unlikely. Because the Reserve Bank of Australia is still taking a sort of softly and wait and see approach, and just sort of trying to gradually sort of increase interest rates, whereas obviously the Fed and other central banks have really gone for the sort of turbo boosted rises going forward. Obviously, the Australian economy is really benefiting as well from sort of China reopening, and that's having a reasonably good impact on the Australian economy. Now here in New Zealand, obviously the news has been dominated by the stepping down of Jacinda Ardern, the New Zealand Prime Minister. Now Chris Hipkins has taken over. He was the only person to put his hand up. Because certainly, Labour has been struggling in the polls over the last sort of 9 months. They lost close on sort of 20 percentage points. Potentially, given the sort of recent polls, it looks a little bit of a hospital pass because, at present it's very hard to see Labour winning the election in October. Essentially what it does do, it gives the government an opportunity to sort of cut back on some of those policies that were pretty unpopular, and rather sort of saying it's a U-turn, obviously you can just say, look, with the new Prime Minister, this is a new direction, and this is the way we're going. So certainly it will be very interesting to see the next sort of couple of opinion polls to see if Labour do manage to claw back a little bit of that sort of lost ground. Obviously, in terms of the economy, and really a major problem for the government has been the cost of living issues. Latest round of inflation data is coming out this morning, and a couple of the banks out there are predicting that one will be flat. Another bank is actually looking for a fall now and dipping back below 7%. Now, if that was the case, that might give the Reserve Bank a little bit of food for thought, because they meet again in February, and again talk that potentially another sort of 50 basis point increase. Now, if that is the case, bearing in mind it's 425 at the moment on the OCR, that'll take it to 475. Most analysts and sort of economists predict, rates will top out just over 5%. But then in a further interesting move, ASB actually cut its 5-year mortgage rate, although there was a slight increase to the 1- and 2-year rates. Now, whether that's just trying to get a little bit further, market share out there, it'll be very interesting to see. Because certainly house prices are still pretty soft, although in a couple of areas they are starting to show a little bit of a rebound. Obviously, still a major issue with labour shortage, and it's just very interesting to see how that does play through in the next sort of couple of months. Also as well, potentially for the economy, a little bit of a boost as well as international students start to come back to New Zealand. They've really been absent for the best part of 3 years now. And it certainly does give the economy a pretty big boost. So we'll just be very interested to see what those inflation data is, and potentially that does sort of set the tone for the first quarter of this year. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.